in case it gets good. We mentioned dollar earlier, and this old high back here. What's resting above this high? Buy stops, liquidity, okay? BS. We got to watch that, Ian. I might misinterpret that. All right, so anyway, retail traders going to see this as resistance, right? They're going to say, okay, this is a part of the time where I want to sell the marketplace. When it hits this, market expands through that, runs through it to unload longs that were accumulated down here. Let's look at the dollar related to the cable. Okay, so we have, what's down here? Sell stops. Okay, so we have dollar already running out a high. If it can stay above the high, let's go down to a 15-minute time frame. If it can stay above the high and get some kind of expansion going on, we could see reception, good grief, what the hell am I talking about? We could see sensitivity here as it returns back to fair value. And then make a run for the liquidity resting below these lows. Now, it's not much of a move. It's something to study if we have the dollar maintain its move above that old high. So we're going to balance the two. We're going to be looking at the dollar being willing, if it is, to stay above the, what is that? 96.30 level. So it has to stay above 96, preferably 96. Yeah, it's too small of a range. It needs to stay above 96.30. I wouldn't even want to see it return at all. I'd like to see it just continue going higher. Okay, so you have sell stops below here. My voice is shot. Now watch as it hits this, right in that level here. And you're going to study, does it have a willingness to stay below the midpoint of that candle that's up? Now notice this candle here. You see this candle? See what this candle's done? Look at the high on this candle. Comes in at 127.70. You see that? What's significant about that level? That high on this candle? Very good, Darren. Very good, John. It's already traded to the mean threshold of this up candle. See that? It's already hit that once. Hit it. It's a retrade. Came down. Now it came back to the bottom of this candle. I don't know why my lines are so freaking thick. The body of the candle's here. The wick is down here. In this little area here, right in here, what is this called? I hinted at it in the previous session we just had. One more word to it. You guys close. One more word add to that. Fair value gap. The gap between the wick up to the body, that's a fair value gap. Okay? right in there. You don't want to see it go through $127. It's really like splitting hairs right now, so it's not that big of a deal. It's not that much of a range. $127.69. So look what we've had here. We had the market create a range. We were jawboning. Market came up, cleared this short-term high, which is nice because now we do have a stop run, and moved back to a bearish order block. So we have the stops underneath here are in jeopardy. This movement here cleared this stop, and it also went into a bearish order block. The only thing against this is the time of day, but the positive still relative to the time of day is the fact that we have dollar still above the run-in on its old high, which I need to use a time frame to look at it. So we've cleared this high out. We're in an area where it could expand more. If it's going to be good, it should. Already shown a nice little reaction so far. Not a lot of pips, okay, but what we're doing is we're studying to see if it does have responsiveness at the levels where we reasonably expect it to. Here's a question for you. Let's say this wick creates a whole turnaround. This candle goes bearish, or the next one opens up in 2 minutes and starts careening lower. What would you expect to see once we get, if we do at all, if we get below these equal lows? What would you expect to see in price? If we're expecting the dollar to hold on to its high and maybe even move higher, if that's what we're expecting, what would you be expecting on the cable? You want to see if it has willingness to go below 20 pips, below this low. If it moves below this low more than 20 pips, what does that indicate? Expansion. You're going to see price not just probe liquidity, okay, by running below an old area of equal lows or sell stops would rest. It would be a significant, much more significant price move, which is what we're leaning towards here because we've had the market go in consolidation. We've had a short-term high. It violated that, and it reacted at a previous bearish order block. So if it's going to be good, it won't need to come back up here. If it does, it's not good. If it goes from here down, it's good. Here's a question for you. Let's say you just turn your charts on right now. Right now, you turn it on. Could you do anything? Really? I'm surprised. You're still very close to the order block, and you're still inside the consolidation. Why wouldn't you consider that a trade? Well, obviously, yeah, time of day, an issue. But I'm saying for an exercise, we're not looking at a live trade here. For exercise purposes, why wouldn't you reasonably expect to take this as a drill? You know what side of the marketplace it's going to lean to. Man alive. That's 20 pips. Okay, so it's trading at 27.47, and 27.20 essentially is the level lower than that. So we got about 27 pips downside and about 22 pips on the upside as a stop. So the question is where does it want to go? Do you want to see price stay in this consolidation and go higher? In what sense would that make? Or to go below these lows and discern whether or not it wants to go farther and stronger, or reject right there and then go higher? What's dollar doing right now? It's holding firm. Okay, still holding onto its high being broken. This high here being broken above it. Okay. So what you're actually looking at here is when open float is building. Now we're only looking at liquidity on the 15-minute time frame, so it's not going to be an exorbitant amount of buying or selling interest. But above this high and below these lows are liquidity. I'll just have to work for that. Okay. Really, really, really drawn in tight on this. Here's a question for you. Time of day, we're entering London close. We have one low, two low, and say it stops here. Does that look like traditional daily range? In other words, how often do you see daily ranges intraday create the low of the day like that? So even if it's going to trade higher off the close, I'm sorry, into the close, there's a strong likelihood that these lows down here will get snapped through. Now, whether it has the willingness to continue going through that, we don't know that because of the time of day. What we do know is that the daily chart on cable, let me get a brand new one. We're in new territory down here. We took this low out and we're expanding. See that? So in reality, we have what's below us. What's below us? The abyss. That's good. That's a good one. Oh, that's good. So we're in new territory now, okay, for bearishness on cable. So if we're seeing the dollar, again, it has to stay above its high. If it starts to come down, then we're going to, retrace a little bit, and probably tomorrow be a really, really good day. And here, we still have consolidation. Now watch and see if it wants to get up into this 127.69 area. How far would you let this trade on this candle? How much would you allow it to go up to and still consider it a sell? You'd allow it to go all the way up to there? My personal opinion, if it gets to this, it's not good. I would be allowing it to go up to the body of the candle, the opening. I would permit that. But if it gets above that and goes into this level, I would not be interested in selling it there. Now, here's another, you don't ever hear me talk about this, but we'll be teaching it. There are times when, say for instance, this was a little bit better in terms of the time of day, and we had all the conditions that we're describing here still in play, but we had more daily range available to us, because right now we're entering London close. Not to say that we still can't trade lower because of London closing, because we still have North American trading time. We're essentially till like 2 o'clock in the afternoon. But if it were to trade up to there, okay, one way you can trade this on an autopilot, set and forget type thing, is that you could place, once the trade is trading here, you could sell it on a stop at this candle's opening. So in other words, if it traded up here, you could sell on a stop. I'll give it to you like this. When I first started trading commodities, this is actually how I traded. I would sell on stops and buy on stops. I would get in the market when it would start moving in my favor. So now imagine, say this trade goes not trade, but say this market trades up to the 127.69. Say it trades there, okay? We could put a stop, the sell on a stop at 127.47. Now we don't have a long position, okay? We don't have a long position right now. But if price were to trade up to that price point, if we put a sell stop here, it's not protecting a long position. What would that sell stop do once price hits that? It would put you in a short position. Now, you can do what's called a parent and contingent order. Okay, parent and contingent order. That means if the situation is this, if we go up to this level here, okay, you can place an order that I want to be a seller down here at 127.47, and if it fills me on a stop, I want to use 127.69 as my protective stop loss on that short. Do you understand what I just said? Good. No? Okay. Reason why is, okay, say it goes up here and trades that level. It could go up there and hit it and then run right lower. But because I'm unwilling to sell it up here, because if it gets to this price point here, my belief is it's probably not going to go down this trading session. But I'm willing to revisit that idea of being a seller if it goes to that level and then trades back down to this candle's low or the body of the candle. Because think about what it would be doing. It's going up here and then washing back out. So if you're selling at that body's low, remember what I was talking about earlier in this morning's session? We're looking at the bodies of the candles that make these lows and highs. So if it gets down to this level again, it's probably going to keep going lower. Okay, and look what we've defined. That's not a bad stop loss, is it? I mean, if you get short down here at 127.47 and you know what your stop's going to be, because the order would be contingent on if you get filled on a stop, after price hits here, you would place this order in the marketplace. You would say, okay, I want to sell at 127.47 with a parent and contingent order, which means if this order fills, then my order goes in as a buy stop protecting that short at 127.69. So if price runs up here, if it goes back down here, you can be a seller, and then as soon as that sell stop gets activated, it places your stop loss at 127.69. So my theory is this. If it goes up to that level, I don't want to sell it there because I think it could potentially go up here. But if it goes to that level, you can place a sell stop here, parent contingent, and if it fills you on a sell stop, you're short, your stop loss needs to be where? Here. And it's defined because if it goes back to that level after coming back down here, then it's probably going to keep trading lower. Is this a bad amount of risk in terms of pips, not dollar terms? But is this a reasonable amount of pips to have, isn't it? It's 22 pips. The idea is you're inside of the consolidation with the weight of the direction leaning on what side? Above us or below us? So if we have the freedom to be trading a lot lower than we are now, okay, I don't want to take this trade here because ultimately, if it's good, it shouldn't even go back to that mean threshold. 127.69 should not even be traded to. So there's two conditions that we could have been operating in here as an exercise. One, you could be short now. Okay, you can be short now with a stop about 8 pips above the mean threshold, looking for a move down to 27.19. Or you wait and see if it trades up to 127.69. If it does, you sell on a stop at 127.47, and then you'd use 127.69 as your protected stop on the short. Both conditions would be looking for 127.20 as downside objective. Does that make sense? Now, looking at the dollar, what happened here? Was it able to hold them? Did it stay above its high? So now, what does this indicate for cable? Does it have a willingness to go lower with this type of action on the dollar? Now go back to cable. What happens now if cable does go lower? What does this become? Potential turtle soup or a false break below the low. So that to weigh this, you have to be able to look at both markets in contrast to one another. I should have it at split screen, but I didn't think ahead. I saw it on the chart when I closed the previous session. with the folks that couldn't get in line with the mentorship. And as I closed, I saw a cable. I was like, oh, it's setting up something. Let me get on here. There's guerrilla warfare setups. They just jump out and you don't even know when they're coming. Yeah, it would have been, well, obviously, you know, it's going to be that's the trade of the day in London, yeah. But you are getting a London close set up here. If we can see dollar resume its move back above the high and obviously expand through this previous high, that would give us freedom for this to trade a lot lower than just to run the stops. Given the condition that the dollar's in right now, okay, it looks like a 10 pip run below the low is in order on the cable. If we see resuming of the dollar wanting to go higher, then we'll have to weigh out whether or not there's any strength to get down to 20 pips below this low. So given what we see in dollar there, it only looks like 10 pips is possible if we can run down. If we see movement on the dollar resuming higher, and especially if we take out the high that it made here, then we have to contend with what we do with cable once we get down to 20 pips. So if you have a drill on and you're short and you're testing yourself, you're getting, you know, exercises in the price action. If it gets down to 20 pips, you got to take something off. If it gets down, did I say 10? If it goes down to 10 pips, you got to take something off. You definitely have to take another portion off at 20 pips, and you leave something on to see if it wants to expand a lot lower, because this could just be the middle point of the next new leg lower. So far, it's wanting to get back above it, but you have to see expansion, and that's what makes these types of trades a little bit more difficult. And that's why if you looked in the free tutorial sections, for everyone that's new, it introduced themselves to my stuff, I kept you looking primarily only in London and New York session trades. London close is a little bit tricky. You got to have a lot more versatility for them to pan out. Adam says, I'm not used to selling at the low. That's what the drills do. They desensitize you to things that you're not used to doing, or preparing yourself to do things that you're not accustomed to doing. It forces you just focus primarily on what price is telling you. Because while the majority of the daily range, okay, the majority of the daily range is seen between 4 a.m. and 10 a.m. New York time, I can tell you that very rarely do you see markets create a low intraday like this, especially during times when the markets moved into new territory where it's open waters down here. The typical low that you would see is like a V bottom or a spike down and then quick rejection away from it. That's generally what you see as the daily low is formed, or the daily high. It usually forms between 10 o'clock in the morning and 11 o'clock in the morning, New York time. But think about what you're seeing here. You're seeing the low, it runs down, it comes back up, it runs one more time lower, comes back up. Now we cleared some stops, and we moved back into a bearish order block, and we saw some willingness to want to go lower. We traded back into the bearish order block again here. So that's why I'm saying it should not, if it's good, it should not go back up to 127.69. It should at least try to probe below these lows. And I'm personally thinking that if we did get that movement down here and we see the dollar want to spread its wings a little bit higher, which it doesn't want to show us now. And again, the only thing against this is the time of day. That's the hardest part about taking London close setups. Like say you haven't taken a trade the whole day, but there's a potential movement on a higher time frame that suggests a directional bias. You can do London close continuation trades. In other words, it would be like the next leg lower in price. If we look at what we've seen here, we saw price retrace a little bit and then expand lower. Now we're consolidating. The next level would be basically seeing another movement like this from this high projected down. That's what I think's in play. But if we lose ground on the dollar, okay, it's still flirting with that high, which is I don't like to see that. And I think it's primarily because of the time of day. If this would have been like a New York setup where between, say, 7 o'clock and 8:30 in the morning New York time, man, I'd be all over this. I'd be short like crazy in cable. I'd be short like nobody's business. But because of the time of day, why am I telling you to do the drill? Why am I telling you to get in here and do a demo account short here using these parameters for stops and ideas? Why am I telling you to do it? Is because I want you to feel the length of time it requires you to be in the marketplace and the lack of velocity in the trade. And you couple that in contrast with it, the movement you'll see in when we do live London Open drills and when we do New York Open session drills where actually live trades are done. You'll see there's a strong contrast between the two. You'll get immediate feedback. You'll get you'll get responsiveness immediately from price, which is what you want to see. If you see lethargic consolidation, which is expected here because we're in the consolidation, what I'm trying to teach you is how the market will reach for liquidity outside this consolidation and why it's more inclined to go lower because we've already cleared the level of stops here by running up to this level here. And it also moved up into this up candle prior to this down move. We know what the up candle is. It's smart money selling. How do we know they sold there? The market repriced lower, bounced a little bit, went lower again, created a short-term high. The market ran up, cleared that high out, and into an area where it returned back to fair value. Why is this fair value here? Because they sold there once before. The market's in an area where it can go lower. The dollar showed the willingness to want to go higher, but has yet to really do anything outside of get above its old high. So it's a lot of balancing act that has to go on between monitoring the dollar, time of day, and look, the open float. We have buy stops above here. We have sell stops above here. If we get above 127.69, I think what's going to end up needing to be seen is this void will have to be closed in up to this low. Okay, so if we lose the 127.69, say we go through that, we're going up to this body's candle right here. The open on that is 128.21. Otherwise, we're looking for lower 127.20, 126.90. $126.90. You heard me right. How do I see it? The Central Bank of England, they send me text messages, and they're telling me earlier that 126.90 is probably going to be. You gotta pay extra for that tweeter. You gotta get the premium ICT Twitter feed. Now, my reasons for saying that level would be if we get expansion and we take out the 127.20 level, it's probably going to make a hard run down into the 127 big figure, which is 127.00. Okay. If it's going to do that and we have all this free space below us on the daily chart, it ain't going to stop generally just at the big figure 127. It's going to run through that to reach to see if there's any more participants that would love to sell even lower down there or to be buying down there. And the reach for that liquidity down there would just make price, obviously expand that much more. And I'm not saying that would be the low either. If it was to run really hard, 126.90 wouldn't be the end of it. I mean, there's a lot of space down here. I can see your question, Paul. I just maybe not have seen it when you did it because I'm looking at the actual chart. I'm occasionally looking over and seeing things, but I may have missed it when what was your question? Man alive, I feel like someone's sitting on my freaking face, smothering me. Do I include wicks in swing highs and swing lows? Well, you're going to be using them in a couple different exercises and studies, but I'm going to take you away from the wicks a lot of the times and focus primarily on the bodies of the candles for specific reasons and specific criteria. There are certain times where the wicks are necessary, and that's when you're dealing with the order block. If it's returning back to an up candle, the wick below that candle, like we just outlined here, the wick in this instance is important because we're managing the range between the low up to the body. That creates a fair value gap. There's going to be a willingness to want to see price go up into that level. Many times it'll stop just right at that low, okay, and that's all you need. But when I'm looking at swing highs, you're going to look at every reference point on those three candles, the opening, the close, the low, and the high on every one of those three candles. So you're looking at 12 points of reference. And I'm going to teach you what those 12 points actually give you. There's a lot of insight that comes by way of studying them. And when price does certain things around these particular levels, whether it be a swing high or swing low, it's very consistent. But I can't teach everything, obviously, in one session. But I'm getting you there. Just hang in there. I would not want to buy it. No, I wouldn't want to buy cable here. Even if it went above 127.69, I wouldn't be interested. All right, watch this candle here. Got a new 15-minute candle open. We gap down below the body of the candle here. Let's see what we do. Now, I can tell you when I first started trading and I was looking at intraday price action for S&P, oh man, there's some horror stories here. The lows like this, okay, I would be many times selling once it went below that because I learned from Ken Roberts and that was my introduction to trading. If it breaks a support level, what does it mean as a retail person? It's going to go lower, okay? Well, not always. And if I could show you, and I really wish I could, if I could show you what I was doing back then in my early days as a trader, I did everything the worst possible scenario. The worst possible scenario, man. And it's uncanny how it was exactly where if I just would have did the opposite, I would have been a perfect trader. I was a perfect loser. I was getting in at the most inopportune time with the highest leverage I could put on there, and it would immediately go the opposite direction as soon as I got in there. had no idea that liquidity was an issue, how markets are drawn because of price. None of that stuff made any sense to me, outside of a trend line, a stochastic, and a MACD, and a Williams percent R. That's what I had all over my chart, and a 50-day moving average or a 50-period moving average. That's all I was using. And when it was a bullish market, man, it was easy to, to be buying on that. But it wasn't always a bullish market. It went to a bear market. Yeah, well, it takes a lot of unlearning, Andreas. I'm in agreement with you. I get a lot of resistance from folks, and I think it's on my free forum in that medium. I'm very arrogant and very pompous, and I do that to entertain myself. I try to refrain from doing it here because it's not necessary or even welcomed. But I think it's the fact that I'm arrogant and braggadocious about everything over in that free forum section that just turns off people, so they think it's no validity behind it. Yeah, that's all it is. I could care less, really, ultimately who likes me. But if they just look past me and just study the material, I mean, it's there. They can't deny it. If you put your nose in the charts and study, it's there. Yep, Gaddy, that's essentially what I had to do. That's what I'm saying. For folks that just started with this as their only medium in trading, you have such a wonderful advantage over me and everybody else that's ever been trading for a while, because we've already been infected with stuff that is just bad. We have all kinds of things in our head that were given to us by people that aren't really looking out for our best interest in terms of making money. They just sell something that looks like it makes sense in the charts, but they have no way of being able to forecast it and use it going ahead, going forward. So if you don't have this preconceived notions about what price should do because of a retail-minded idea, and you're just now learning this type of study or these exercises and view on the marketplace, you actually have the best advantage that any trader out there could have, because you're not already infected with these ideas that don't work. They don't. And if they worked, believe me, the statistics wouldn't suggest that trading puts people in the financial graveyard within 90 days, many times in the first 30 days. And many of you understand what that means by that, because you have you have all these things you have to unlearn, and I had to do that same thing, and some of them were very hard lessons to unlearn. I had put Larry Williams on a pedestal, and I'm not trying to be disrespectful to him at all. I'm not saying that to imply that I'm not appreciative of what he contributed to my development, but I'm telling you this. Initially, I thought the man did no wrong, and whatever he said, that was the gospel. And I would get in arguments with my uncle because initially, we tried to work together in terms of supporting one another, and then because of our contrasting personalities, and in mine obviously being what it is, I'm like an alpha. I won't let anybody else tell me what I should think. And when I submitted that only Larry Williams could tell me what I should be doing, when I started seeing his things fail, it was very hard to take that, because I'm thinking, what is going on here? I have to be doing something wrong. No, it just didn't work. And you convince yourself that you have to hold on to these ideas. And if you're new and you've never been subjected to the other disciplines of trading, you don't have that problem. You are a virgin mind, and that's beautiful. You're not corrupted with all the stuff that's going to have to be forgotten. And everyone that's traded for a while has all these things to work through. You know what I'm saying? So you are at an advantage. And in fact, those individuals that came into this with no understanding about price action, I mean this sincerely, you have the ability to be a better trader than me and blow way beyond what I am, well beyond me. And I mean that. It's not a sales pitch. You've already paid me, okay? Bottom line is I personally believe that every individual out there that does not have all the retail crap, and they've come into our fold, if you will, and they're learning this as their introduction to price action, man, you are I envy you. I absolutely envy you, because I wish I could have started with this, because I could have avoided all kinds of pain, lots of money being lost. And the long and short of it is, you're going to be a much better trader than you would have been if you would have been exposed to the infectious disease that is retail. I wouldn't answer that question, Christian, and I'm not going to. Yeah, I honor everyone's anonymity here. I would never tell anybody they're a part of my mentorship. You wouldn't want me talking about you either and sharing that information with someone else if you wanted to be anonymous too. Yeah, when we get through, yeah, I will talk about commodities and bonds and all the other things with the stock stuff in the last couple months. It'll be like a hodgepodge of everything, how it all fits together, because there's a tie between all those asset classes that really build up your ability to forecast some things. Euro pound is not done. It still wants to go higher. That's a good question, Rami. He says, why wouldn't we wait for higher prices and to fill in that liquidity void? Number one, this liquidity void here doesn't have to fill right away. And if you think about market maker sell profiles and market maker buy profiles, when you see that initial run up in the market maker sell profile, that void stays there for a while, doesn't it? So you have to allow time to unfold until it reaches a higher level time frame support or resistance level. Then it causes that market maker sell profile to put in its smart money reversal, then a low risk sell, then redistribution, then one more redistribution to clear out the original buy point. Because we don't necessarily see the conditions here that would support a market maker buy profile, because of the formation of this low here. We have a low here, we have a low here, and we're just flirting around. All we're doing is crouching right above the liquidity that's going to be ran out here. It's just a matter of, I mean, it's frustrating me because I thought it would already been done by now. And I can close this video up and say there's one more exercise that you got under your belt, but it's just hemming and hawing back and forth there. That's a good question, Arnold. What fills faster, liquidity voids or clean lows or highs? The speed at which, or I guess what you're asking is the velocity. Okay, so we're going to talk a lot about velocity as well. The velocity in price action is much more quicker. The speed aspect of price movement, getting to equal lows or equal highs to run those out, is much stronger and faster than coming back all the way through here. Because think about what we're doing. We identify this as a void, and it's absolutely there. But it doesn't go all the way through all this high, this high here, just to close that in, then go lower. It doesn't need to do that. Because we went down into new territory, and we've already returned back to those levels relative to the daily chart. So while that is a void, the hardest part for you to learn is allowing some of them to stay in your chart for a little bit of time. Now, when does it become influential? When this high is violated. Let's play devil's advocate for a moment. Say for whatever goofy reason, the market doesn't want to go lower here, and it does run up higher and takes this high out. What would we be doing with that information? Well, here's one thing. It could go right on through that and close in the void up to that level we talked about over here. Okay? Or it could go up a little bit and then trade back down into whatever down candle. It looks like if this was a bullish candle and went up higher, it would be this down candle here. So it could go up here, then come back down, hit that as a bullish order block, and then run up and close that void. That would be the scenario of how I would use it or expect it. But given the criteria that we see in price action right now, it's not likely. Everything is more slanted that it wants to take out these sell stops. Think about the traders that are long right now. I mean, that's the other thing you need to be doing is role playing. You know, if you're long and you have your stop right there below 27.40, you know, your stop's down here. For whatever reason, you thought this was long. I mean, are you excited right now about your long position? You broke out your prayer beads. And I can tell you, I have been in this situation so many times, and this was the most amazing lesson for me to learn how to avoid all that type of stuff. These trades right here, like I would be long in this condition right now, and I'd be looking at it, and I literally would be cussing and screaming, and I've literally broken at least 20 monitor screens on this setup right here because I would be long. Okay, I would be long, and I'd sit there and watch. Okay, it's not going to go down there. It's just going to come real close to this low, and it won't hit my stop. I'm going to be okay. I'm just worried about nothing. That's stupid. That's stupid. And I literally would watch it hit my stop, and immediately my right fist would go through the monitor screen, crack it, and I take it. And I only did this one time. I pitched it out my office window, and of course my wife didn't take too kindly to that because I had to put plastic on the window. I'm not a handyman, so I had to wait for somebody to come the next day to fix it. And she was like, "Someone's going to climb on our window." Nobody's going to climb on our window, but I was not able to weather that. 20 inches, 20-inch screen. Yeah. All right, so now watch the price action. We're getting close to that run on these stops now. We're just going to extend this line out just a little bit. Again, this is 10 pips below the low on a sweep. The next grade would be 20 pips down here, 127.19. Dollars gaining ground again. Again, to make it good, it's got to wipe out that high. And we got to get below 20 pips here. And then we can see 126.90. A lot of the new folks that just signed up, and I'm thankful you gave me your feedback, so I appreciate that. But the first response was, you know, I want to see live trades. I want to see more live trades. And you're not going to be able to go through this mentorship if I fill every single trading day with just the live trading sessions only with the live trade. It won't do you any good. Because number one, you're going to have to listen to all the stuff you're hearing me now. Look what's going on. Price is unfolding. It's moving around, but it's not moving to a time limit that is favorable for a video. It takes a lot of time, lots of time. So my aim is to teach you what these things look like conceptually in the first 3 months. Then in the 4th month, okay, it's all just me giving you the setups before it happens, and I manage them through Twitter. I am not going to sit on here for 5 hours, okay, through London and take a break and then come back here for 3 hours for the New York session. That's not going to happen. There's no way I could do that. No way. And you would never be able to keep up with the content, you know, especially for the folks that have to watch the videos after the fact because they have their businesses or their jobs. That's not going to work. So you're going to need to know these things conceptually. That way you know why I'm doing it, why it makes sense to do the trade, and then you can monitor it. Exactly, Jackie. You're here to learn how to do it yourself. Believe me, you're going to see many opportunities over the next couple months that you'll get your tuition back if you just listen. And I'm not going to say anything more than that. But the first couple months is intended to weed out those individuals that are just here for signals. And if you're new, go back and look at all the videos on a day-by-day basis. We were talking about moves every single trading day. It's not important that you watch me take the trade. It's important that you understand that we can call the moves before the fact, because it's not important, because the timing aspect is easy. That's easy. Getting in is the easy part. Knowing where the market's going to go next, that's the hard part. All right, now, does the market make a low like this? Now, I can tell you, there was so many trades in my 20 plus years, okay? I can tell you there was dozens of them. I would still hold on to hope thinking that my stop was okay. Yeah, I'm going to be okay. I wouldn't be able, my wife wouldn't be able to talk to me. My kids were trying to, come on, Dad, let's, no. I got to watch this. I got to make sure I'm not going to get stopped out. What was I doing looking at the screen like that was going to stop price from going down there? I was thinking, if I look at this and wish hard enough, it won't happen. It's crazy what we think, isn't it? Yeah, you start looking at, okay, this is when I was using trend lines. I would say, okay, they're gonna find some support. And I would look and scour the charts and find 2 points at which I could draw a line to justify why it should bounce and never go down to my level. It's crazy. Yeah, that's a good one. Robert says, switch to a chart that makes my outlook line up. Yeah, that's one way of doing it. Yeah. Oh man. Unfortunately, I allowed the markets to consume a great deal of my life. Even when I was making a lot of money, it consumed a great deal of my personal life and my relationships. So if you can learn to avoid doing all those things by just focusing primarily when the market's really favorable to trade, you can obviously give yourself a wonderful life. You don't have to be rich either. I mean, if you just replace what you make as your job right now and you lived a comfortable life like that and you can consistently make money, that to me is that's happiness, that's balance, and then once you finish your role as a parent, then you can push it hard, and it doesn't take long. If you know how to trade, it does not take long to push your money quick and then roll it up fast. uh, how do I distinguish the difference between an impulse move that you want to trade with the direction after a pullback and a large move that you would trade back into a range? That's all going to be taught when we specifically deal with institutional order flow and intermediate term reaction highs and lows. That sets the framework for that. the easiest way of answering that is once you understand what draws price to one side of the marketplace, in other words, directional bias. The thing that everybody wants to know, okay, you have to learn a couple different things to make that discernible. No, you're not gonna be able to just look at a chart or one tutorial video, okay, and walk away with, okay, now I know how to do directional bias. Now I know how to call the directional move. The primary focus for that in distinguishing what impulse price swing and when you're going to trade inside of a previous range. In other words, this could be viewed as an impulse price swing. Correct, right, Robert? I mean, is this not an impulse price swing? Right. But what did we outline yesterday with the trade, well, not the trade, but with the chart relative to the British pound USD? The liquidity pools that were resting below the marketplace indicate what? On that, and again, it was a daily chart, indicates what direction? We are looking for lower prices. So if we're looking for lower prices and we see these big sudden movements like this, we understand that they're in a rush to take price down to those lower levels relative to the daily chart. Since we understand that the direction is being driven solely on the daily chart, these smaller 15-minute voids don't have to fill in right away. So what you're going to do is you're going to look for time of day where it makes sense to look for the impulse price swings, like this one in here. This is London. Then you have another one here in New York. Then you have another one in here. I'm sorry, this is London lunch. Then you have another one in New York here. So you have specific times of the day that you look for these legs to trade back into. We're going to give you very specific details about daily range engineering and how that helps you with your position trading on a long-term swing basis or short-term trading or even day trading. But the time of day is very influential in terms of what you're looking for. Once you see it, once you see how it works, it's very easy to go in and say, okay, well, I'm not going to trade here yet. I'm going to wait until this price leg moves in this direction. Or if price expands down, I'll wait until it gets back up into a specific price level where I'll sell into it. It'll make sense of what you're looking for. Look at that. Soup's on. Notice the cable didn't really run up. Think about that. Look at the dollar. Came down like crazy. Euro popped. What did we say Euro pound was going to do? Higher. There you go. I told you a couple minutes ago during this presentation that the euro pound would go higher. Dollar softer. Cable not wanting to go higher. With that dollar surge like that lower, you should have saw cable stream higher. And it wants those sell stops. If it's going to do it, it's going to take those sell stops first. You can't teach this lesson in static charts. I can't teach it to you in Twitter, looking at tweets. It has to be seen and explained live. Otherwise, you'll come away with it with no understanding, or it'll look like hindsight. There went another monitor. I'd spend the rest of the day not talking to my wife. She'd be mad at me. Haven't you made enough money? You need to stop this. Yeah. Yep. So the dollar came down, retraded back to an old high. What's this in here? What is this right in here? Void. Euro pound rolling higher like we said. Where are we at here? Stops taken out below the lows on cable. Still didn't punch down there. We might get it now. I was going to say it didn't even take the 10 pips below, but we're probably going to get it now. The lessons that you're going to have trouble with, and I'm going to tell you where you're going to have the most difficulty with this mentorship. The hardest ones you're going to have is when the market is not symmetrical and when the crosses are being controlled, like the euro pound. When euro pound is being manipulated, you're going to struggle with that because you're going to expect cable and fiber to be always in sync with one another, and it's going to screw you up. And that's the hardest lesson, and I'm going to tell you up front, that's where you're going to do the majority of your study. Once you understand what situations and conditions drive those, you'll be a lot better trader. But understand this, that's going to be very difficult for you to learn. Now, if you did your exercise, you should be taking something off right now, and whatever your entry would be, then you go to the break even on a time of day like this. You don't want to see anything turn around back on you. Did anybody take the exercise? Very good. You're all asking, as the new people that just came in, and I think a couple of the ones that started in August. It's not many of them, but some of them are like, hey, look, I want to see live trades, and you will absolutely see it. But I need to show you the mechanics behind what makes these moves trades. Otherwise, you're just going to be reacting to me telling you what I'm doing, and you're not learning anything from that. So by looking at price, understanding before the moves take place, if we can't outline the market moves before they happen, there's no way I'm going to have trades that make money. I mean, can't we all agree with that? I mean, forget the fact that we're operating in a demo account, and I'm teaching to a capacity of a demo account. But if I can't explain to you why the moves are going to take place before they happen, it's fair to say that there's no way that I would be making any positive trades at all. And you're not here to watch me trade. You're here to learn how to interpret price action and then do your own trades. So if you're new and you're feeling rushed because you want to be able to recoup the cost that you're spending, just understand there's a small little growth period that you got to go through. It's not long. I'm not going to drag you across 19, not 19, but 9 months of the 12 months without seeing me actually operate. But you need to understand why I'm doing what I do, why it makes sense, and there's going to be times where I'm going to tell you to do something in advance, and I'm going to explain why it's not a good thing to do, but we need to see it and be a part of the moves. That way, when you get into trades and it starts exhibiting these types of things, you'll know that you got to cut bait. Just cut your losses or cut your trade off immediately, and it will help you preserve your capital, which is the number one rule in trading. Not making money, it's preservation of capital, because there's always new trading setups. Now here's something that we're watching, okay? We cleared the lows, we came back up, and now watch. What's this right here? We want to see if it has a willingness to stay below or have a willingness to not want to get through that. Now, again, the bodies of these two green candles, about midway point, it's about right here. So it could move as far as, what is that? Good grief, why did I grab that? It can go up to 127.53. It could touch that and still roll down lower, or it could be making the low of the day here. But if you were short, say you were managing a short from back here, you should be taking something off down here like we just described. We've already seen the body. Look at the bodies of the candles in here. What did the two bodies of the candles respect? $10 pip level, right? So it wicked down through it, guaranteeing it's going to gather anybody with a stop loss 10 pips below these equal lows. That algo does this every single trading day. It sweeps 10 pips or 20 pips. There's two grades. It reaches for 10 pips or 20 pips. The bodies of the candles where the bulk of the volume is, but the wick is where the protraction in market action and price delivery, that is reaching for the liquidity. But the bulk of the volume is seen in the bodies of the candle. So yes, we breached these two lows with the bodies, but it wicked down through, guaranteeing that the 10 pip guys below these lows, they're gone. No. Just because we're seeing this does not equate to it's a buy. It just means the low of the day is probably forming. And it would be no good now. So if you're short on the day, you'd have to collapse your short now and lock in whatever you have. All right, folks. Well, again, one more trading opportunity outlined and given a lot more time than I think was. I don't know. I'll leave it up to you to decide whether or not that was economical use of your time. But you can see what we were outlining, what price should do relative to the dollar. Even though the dollar collapsed and euro popped, we called euro pound higher. You saw that happen here. Dollar collapsed, but we did not change gears on our outlook on cable. We knew that the stops were going to be sold right in here. And we got it. So again, not a barn burner move, not a retire from your job type of event, but these are the building blocks that take you to understanding the trades that we take while you'll see me doing what I'm doing. Because the last thing I want to do is put a trade on and have 300 of you asking, well, why aren't you looking at this candle? You understand? There's no way I'm going to be able to focus on the trade if I have 300 or plus of you asking for something that would have been explained in the first couple months of me just doing modular approaches to what it is I trade. All right, folks, I'm going to close it here. I need to get some medicine in me. The recap will be on. Well, this will be the recap. There won't be any recap. I'm done. I'm done videos for today. We did 2 of them. So I'll set the recordings up, and then I'll put them on the forum, and I'll tweet them once it's viewable. Wish you a good afternoon, pleasant afternoon, and we will be back again tomorrow around. I think tomorrow we'll do 7:30 New York time, and then we'll see if we got anything we can do real time. I'll satisfy the new people's desire just to appease them because they didn't get a chance to see 20 days of daily exercise. All right, have yourself a good one. Good luck, good trading.